If you're doing business, you probably need payment processing. You're going to get more clients if you can accept credit cards, if you can accept different modes of payments from people all over the world. The credit card payment is one of the most common ways to pay someone in any part of the world. If I go to another country, I'm going to use my same debit, my same credit cards. There have been some big changes. You're going to want to stay tuned to this video if you do any credit card processing, because we're going to talk about why your processor was closed, and more specifically, why a bunch of people's payment processing is getting closed. And I have an expert on with me, a returning guest to the channel, Mr. Michael Ramsey, who is a expert at a payment processing company. That's all he does all the time, and you're going to hear when we listen to it and we have the call, and he's going to tell us what's changed and what's new. So Michael, thank you for being here.
Yeah, absolutely. Thanks again for having me, and always a pleasure.
Yes, so I'm going to run into this and keep this moving. If you guys are new to the channel, I'm an international tax consultant. I help people open banks, businesses, do stuff tax incentivized, and also do the payment processing. Michael, thank you. I process payments myself. People, when you work with me, you're going to pay with a credit card. It's probably the most common way. What changed, and why are accounts getting closed more frequently now?
It's almost the equivalent of like a nuclear event that happened with Visa. Recently, there's been some changes to the calculations and how chargeback ratios are really managed. In prior state, there were like the Visa fraud monitoring program, and there was also the Visa chargeback monitoring program as well. And so now in the new world, effective actually October 1st, there's been a change in how these chargeback ratios are now calculated. What's happened is that they now have one standard of really kind of control called just the VAMP ratio, the Visa Acquirer Monitoring Program ratio. And what they have done now is change the dynamic. Before, they used to split these apart. So if you actually had like an online transaction that came through and there was true fraud that happened, let's say customer had the card ran through and it was unauthorized, or they made a transaction, but it was the wrong merchant. Like, these are sources of true fraud. Those were actually calculated separate in prior state. Now they've actually combined this into the actual chargeback calculation. So they take true fraud, which is considered a TC40, definitionally speaking, and then they're also adding in chargebacks and then dividing that by your total number of transactions. So they've added more numbers to kind of like the ratio, right? And then they've also brought down the barrier or the benchmarks to be considered excessive. So
Okay.
before, yeah, that's a
I want to cut you off real quick, because
Yep.
I want you to rewind and go back to really big picture. If I open a Stripe account, a payment processor,
Yep.
why might they shut me down, and how do they determine if they're going to shut me down before? Like, it's based on the risk, right? But how were the risk factors before? A little bit simpler, because
Yeah, I would say, like, if you're looking at Stripe just in a simple sense here, and I'm wearing my Stripe shirt today. I was actually at an event recently or earlier this year. Just in a simple sense, Stripe is completely de-risked, and I think payment processors have de-risked entirely. So the key things to look out for if you are opening a processing account and you want to avoid shutdown is very clean KYC and KYB packages. So having like very thorough information submitted, not scaling too fast. So from zero to like $100,000 in 1 month, that's going to immediately trigger 9 times out of 10. The other piece of it is making sure that you're managing your chargeback ratios and making sure.
and that's what's changed, right? So
Right.
that the first part was the same, still is the same, but now we're talking about the chargeback ratio and like the actual activity that's happening,
Right,
right?
exactly. Yeah,
Okay.
the ratios have actually been lowered to be considered like compliant. So on Stripe, I think they published something, it was about a week or two ago, but now if you are at a 0.5% chargeback rate, you're considered excessive. So before
Half a
that used to
percent.
be a lot higher. Yeah.
So
So
it's one
now,
out of every 200. Is that what a half a percent is? If one out of
right.
200 of your transactions is a chargeback,
hmm
then that's tough, because I'm like close to that myself, and that's just like with like people who didn't want to subscribe or whatever, and because that's not very many. That's really low. Is that
It
automatic?
is. Yeah, it's more of a standardized kind of format that they've provided. And I actually posted on my Twitter or X account about this. It's on Stripe's website in kind of the new ratios called the VAMP ratios. Now to be considered like excessive or non-compliant, those ratios have now gone down, which makes it tougher for everybody, right? Like you mentioned.
Yeah, it just makes it a compliance nightmare. I mean, we're just trying to do business, and like there's people who will like pay for a call with me and
hmm
then do a chargeback before we even have the time scheduled. Like there's people
Yeah.
that just do chargebacks, and that's
hmm
just in their nature. And like with me, if you schedule a paid call with me and you don't like it or you're not happy, or in any service, I don't charge back. I'll give you a refund, and that's what I
Yeah.
tell clients. Like, if you're not happy, I'll refund it. A refund doesn't affect the ratio, right?
The refund will not if you have chargeback alerts enabled.
If I just like decide to refund a client, it doesn't show as like a anything. It's not any kind of negative points.
So, like in a case where you're doing a refund, there is kind of like this optic that refunds are not bad. I mean, they are better than a chargeback, but a high refund rate too is also something that is scrutinized. So, if you're having a lot of like refunds all the time, right? Like, and your rates are, let's say, 2, 3% or even more, that gets scrutinized too. So, you got to be a little careful with that. But it is better
Okay.
than a chargeback.
So and what about a chargeback that you win?
It's still going to show as a chargeback. So that's a slippery slope, right? So even
So
if
because
you have a
I've had
chargeback,
chargebacks of people that did it by accident and then revoked it and then
right?
canceled the chargeback, but it still shows as a chargeback.
Yeah, that's again, you can have those revoked. So yeah, there is some timing and some things that take place for it to
Well, you
be
can win. A
revoked.
chargeback is like you dispute the chargeback. So when
Hmm.
someone says, "I didn't authorize this," and you have an email of you sending them the thing and saying, "Hey, I made the payment," and they made the payment on their computer, and you have all the proof. You
Yep.
know, it's funny. I've had people schedule calls with me, and I do paid calls. Obviously, if you're watching the channel, you want to talk. I do paid calls, and people will do the call, and they'll say, "Great call," and I'll send the recording to Stripe, and I'll send the proof that I did the call, and I'll still lose the chargeback.
That's interesting. Yeah, it's there's all these different things that you have to provide and upload within the Stripe dashboard. And ironically, over 2 years, we've only had one chargeback, so we only had to do this one time. But I help merchants all the time. But yeah, you have to provide evidence like to the 10th degree to win the chargeback, especially if you're delivering like a non-tangible item, right? Like you're not giving them a t-shirt or shoes, you're giving them advice and like consulting, right? So it's like in the eye of the beholder here. And whoever that underwriter is that looks at the chargeback is really making that decision, unfortunately.
You know, it's funny. If you're doing a tangible good, it's so hard to do chargebacks because they show the proof. I just ordered a pen refill for a pen I have, and
Hmm.
the box came empty. I'm like, God, what do I do with this? I can't return it. There's not in there. They're gonna say the product's not there. Like, what
Yeah.
am I supposed to do? And then I contact the store. They're like, you bought it on Amazon. Like, I guess I'm out $15 or whatever. So, um, yeah. So I,
An empty
you win some, you
refill.
lose some. I would never personally do a chargeback unless it was actual fraud. And in
Yeah.
that case, we're gonna figure out why it happened. So, in any case, don't do chargebacks, guys. Have a heart. If you don't want someone to charge back you when you're watching this video, don't charge back someone else.
Yeah.
Just don't do it. Ask for a refund, and if they're complete jerks, I don't know, but I wouldn't do it. Anyways, we were talking about why was the Stripe account closed. You were telling me about the new ratio. So before, it was higher, so it's really like you could have 3 chargebacks per 100 persons. Now it's 0.5. Is that what you're saying?
Yeah, so the ratios were like there was more acceptable levels, right? And then they kind of cut up in two different lanes, which is one was that they were managing fraud. And definitionally speaking, it's called a TC40. It's Visa's kind of language of like true fraud. Now, again, true fraud would be defined as something that somebody stole the card, used it like without you knowing, or the business ran the card without, your authorization, right? That's true fraud. That was a separate calculation. And then there was chargebacks, right? It's just chargebacks that come in divided by total number of transactions. What they've done is they combine those. So if you have like true fraud, there's a lot of what's called friendly fraud. So going off of like a subtopic. Sometimes like, let's say your daughter uses your credit card or your family uses your credit card. I'm just using an example here.
Yeah, it's a
Right?
good example.
Somebody
My
uses your
son
credit
buys stuff on
card.
Roblox, and I'm like, God dang it, how'd you find this? Yeah,
Yeah.
anyways. Yeah, so it happens.
And you're like, hey, I have no idea what this transaction is. If you call your card holder and you say, I have no idea, I didn't authorize it, that is definitionally like it's fraud, right? But it's in a bucket of friendly fraud. And that now counts against the merchant in their chargeback ratios too. Even if it doesn't go to a chargeback, that investigation, that TC40 is additionally calculated now. So it's like you're being almost double counted on your chargebacks and the fraud. They're adding that in. So your numbers, your ratios are essentially going up naturally, right? And then they're bringing down the threshold. It's a very challenging time for a lot of like online sellers right now. Very
So
challenging.
action step here would be have a really good phone number that you actually answer on the receipt. So if I'm looking at my statement, I can see like, oh, here's a phone number. And if I feel like calling, I call and someone actually answers, then I can figure out what happened. or a good email, because I see a lot of numbers don't work. When I've done this before, I pay for a lot of
Right.
stuff. So
Right.
that's a good action step there. How is this affecting our high risk friends? Are people selling supplements? Are people selling, well, supplements is super common still. It's a big industry, but
Yeah.
how's it affecting them? Are they just getting shut down left and right?
A lot of these supplement brands or, a lot of like online sellers are moving to a subscription strategy, right? And so a lot of them will like have like refills after a certain amount of time. If I were to isolate supplements, for example, you always want to make sure that you're collecting all the card data, right? So whether it's the billing address, CVV, you want to do device fingerprint. So I naturally will buy stuff either on my computer or my phone all the time, right? So if it's outside of that ecosystem, you should have a filter that would decline my transaction if I run it through somebody else's computer because I never do. And then you have your IP lookup, which, if I'm traveling somewhere and I'm not registering with other items, then, it should decline the transaction, right? Like I'm in the US right now, but if something was ran in Germany with my card number, it should decline that transaction. So front end fraud control is very important. You want to make sure you got that down. The second piece,
So,
oh, sorry, go ahead.
okay, I'll let you do the second piece because I have a separate question
Yeah.
off this.
So the second piece of it too, if you're doing supplements or anything like you mentioned, have like very clear descriptors, right? Have great communication to your customers on shipping, delivery, timeframes. And then if you are doing refills or any type of subscriptions where it's like a VIP membership, you want to make sure you're disclosing when the rebill is going to happen and give them a chance to opt out, right? I know that a lot of these guys that I talk to, they're like, I don't want to lose the conversions by over communicating them, and then having them cancel. But you're just digging yourself a hole because if they call their bank, charge back and say, I have no idea what this is, like what's going on. Now you're really double penalized, right? And then you're in danger of losing your merchant account. So you
We're
got to be really customer centric now more than ever, especially with the new fraud ratios in place.
This is really good information, guys. If you're doing e-commerce or any kind of online business, I'm taking a lot of it. I do a service, right? So you guys are watching the channel. We have we have clients that can opt to renew with us. So it's an annual renewal. We send emails 2 months before, a month before, 2 weeks before, and, let people have an opt out and stuff. Still, we have issues. Like, why'd you charge me? I'm like, well, we sent 6 emails about it and texted you. And it's frustrating as entrepreneurs because like you're doing all this stuff right, and sometimes it doesn't matter. You might do nothing wrong, but it still gets shut down. And this is happening all the time. And this is what's going to lead us into our follow-up video. There's obviously a lot of information here, and there's a lot of specific stuff. We're not going to talk for an hour and give people a ton of things to do. I think I'm going to give a chance to go over a couple, 2 call to actions that we talked about before. Tell me some of the call to actions. Like, what should people take out of this, and what should people do differently when they're reviewing their credit card processing to kind of de-risk themselves a little bit?
Yeah, I think the first thing that you want to have more awareness of, and again, I'm trying to add some different elements that maybe weren't discussed before. I think you want to make sure that your front end fraud controls are in place. So, like if you're using Stripe, you can use Stripe Radar, and then make sure that all the information is being collected and you're airtight on that. You also want to make sure that you're implementing chargeback alerts. We use Disputify or Charge Blast, recommend that to a lot of our clients. And I think ultimately you cannot rely on Stripe anymore or Shopify payments or even AirWallex to a degree. You want to have a backup processor.
What's Disputifier? What does that do?
It's a chargeback management system, yeah. So they have different fraud tools for orders, and then they also have
Do they
charge
prevent chargebacks, or they help you address it when it happens?
both. Yep. Yeah,
How does
helps
that work with
prevent
HubSpot?
Well, it links in with your processor. So if you're using Stripe, it's like a separate platform where you can log in and then manage the chargebacks through that platform.
If you guys have any other questions, please comment in the description below. We're going to do a follow-up video, so click this video link right here. The best payment processor for your business. It's a follow-up. Like you got shut down, click this video and let's figure out what we should set up, which processor we should use. If you want to schedule a call with me or the team, jamesbakercpa.com/schedule. We help people open up companies, bank accounts, payment processors to an extent, and then my man Michael at compatents.com. They have education there, and they help you set up the payment processors. Click this video, and I'll see you on the next one, guys. Thank you.